Morning, Market Chameleons. Morning, Dima. Lost track of time there. Was on a text. Sorry about that, buddy.
Okay, no
How you
problem.
doing?
Pretty good. How are you?
Great. Well, it's Thursday. We got a lot of chameleons on the chat. A lot of them were looking at that earnings in Splunk. I don't know if you saw that, but it had a big move. They were chatting about that. And there's also some questions about the insider trading that maybe you could get to today too. But with that, let's get started with the disclaimer. What do you think?
Yep. Good morning, everybody. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions, to provide you with guidance. There's the disclaimer, everyone. And
Excellent.
With that, we could get started. So let me share my screen real quick. I think we'll start. We'll take a look at what's moving into pre-market hours. Take a look today at upcoming earnings, what's going on there, compare how what the options are predicting versus historical moves. And we'll take a look, maybe you mentioned the insider trade screener. So I'll go to that today as well. And if you have questions, when I get to it, I'll try to address the questions coming up.
Great.
We have time. We'll take a look at some bullish and bearish option opportunities. So with that, let's get started with the pre-market. These are stocks moving into pre-market hours. We've got the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's first filter out stocks with a market cap of $20 billion or more. So here we go. I'm using this filter, market cap $20 billion or higher. So we see CRWD up 12.2%. Let me see. That looks like it had earnings last night. So that's up 12.2%. Let me see. OKTO's up. That's not very big volume. PLTR, that's up 5% on 1.3 million shares. Tesla up 3.9% in the morning, trading 1 million shares in the pre-market hours. So I'm just hovering over these little ends. That's just telling you that there's some news out there. And if you hover over it, it just highlights those news articles. So I'm just reading it really quickly. You know, doesn't seem anything there from those headlines. Let's take a look. I'll take a look at CRWD real quick. Since they reported earnings, we see that stock closed 141.84, trading 159.15, up 12.2% in the pre-market hours. We see that, you know, looks like they reported news and they beat, and now analysts are raising their price targets. So there's like the news out there. Here's how it looks in the pre-market hours, a little bit choppy. And trading about 103,000 shares. Let me see historically how this performed. And it doesn't look like we have a big history here. So this looks like what, it just IPO'd like in 2019 or something.
Yeah, it's a pretty recent IPO.
Strike. So just from the brief histories, what we have here, we see that 67% of the time it gapped higher after reporting earnings for an average gain of 5.2%. Average move up or down in the morning, 10.5%. So we're above that right now, 12.2% above the average. High move is 19.8% on March 19th. After the opening, this is what it tended to do. From the opening to the high of the day, the average move was 3.1%. From the open to the low, average move was down 5.2%. Historically, it tended to drift lower after the opening price, and here we have a small history, but on average it lost 3%, and it looks like it drifted lower each time after the opening when it reported earnings. Again, there's, you know, they beat expectations, they're getting raised price targets, so go read that news, see, you know, leave it up to you to interpret that. This is just a price action analysis from a historical perspective. Let me see. I think DocuSign, they're coming out tonight after the market close, I believe. Don't see anything else popping out at me. Let's take a look at the unfiltered report. So we have a couple up here that are moving. EVK up 170, up 176%, trading 31 million shares in a pre-market. I don't see any kind of like news right now that we're catching where we'd have that little N. So this is apparel manufacturing up 185% on 7.7 million shares, compared to a float of 4 million. So something might have happened, but we're not picking up anything right now. But as you can see, right around here after 8 o'clock, just started moving higher. Let me see. I'm going to roll down to, I mean, I do see some stuff popping up here, lower market cap stocks. WDR up 49%. And that looks like they're like on a takeover, proposed sale. I'm going to move down here and just take a look at the last 20 days. I know that we've been seeing a lot of auto manufacturers popping up at the opening. So just as an example, let's take a look at what happened to these auto manufacturers after they gapped up in the morning. What happened to them the rest of the day, right? Did they continue going higher? Did they open up higher and then sell off and close that gap? So let's just take a look at that as an example here. And I was looking at that right before we started the show. So this down here, when you scroll down, this captures in the last 20 days all the stocks that gapped up and gapped down. So see here, gap down is over here. This tab, gap up is this tab. And then what we do is, and let me show you, here's all the data. So these are the stocks down here. These are the dates that they gapped up. Then what we do is capture the opening move. This one gapped up 1.8%. Then we take a look at a snapshot at 10 a.m. to see like after the opening what happened. So you see this one almost unchanged, down 0.4%. And then what did it do by the end of the day? So we see here drifted lower 2% from the opening price, right? So this is where it opened. This is where it was at 10 a.m. This is where it was at the close. And then we capture those percentage changes. So we could see here, if we just took all the stocks that gapped up in the morning by 10 a.m., 46% of them went higher, 53% went lower. On average, if you took the average move of all of them, it's basically unchanged. By the end of the day, it looks like 51% of them finished higher from the opening price, 49% lower for an average gain of 0.2%. So that's how we're aggregating all, the stats up here. So if we use this as a comparison group, right, let's now filter out and narrow it down to, well, what happened if this is what happened to all the stocks, no matter what the market cap was, what industry, this is what happened to all of them. What if we narrowed it down and see, especially, let's take a look. I picked auto manufacturers because there's a lot of excitement around there. It looks like, big percentage gains. Is there a follow through after the opening? So here I'm going to use this industry here, and I'm going to roll down to auto. So, and we have like, at least right here, I have 3 different industries: auto and truck dealerships, auto manufacturers, auto parts. So let's take a look at auto manufacturers first. So here I'm filtering out auto manufacturers, okay, on the gap up analysis, and these are the stocks. So you can see here Ford, General Motors, Tesla. These are the dates. These were the gap moves in the morning. This is what it did by 10 a.m. This is what it did by the close. So if we compare these two groups, we see that by 10 a.m., the stocks that gapped up, 50% of them were higher, 49% were lower, on average, unchanged. But at least as the amount of stocks that went higher versus lower, it looks like that group did a little bit better than the overall population. By the close, it looks like 53% of those stocks from the open to the close were higher, 47% were lower, for an average gain of 0.9%. that looks like that's better than, that overall group if we just included all stocks, any market cap, and I'm not filtering here by market cap. So that's the stocks that gapped up. Let's see auto manufacturers, how they did if they gapped lower. So I'm going to come down here. So these are comparing all stocks that gapped lower, what they did afterwards, and just auto manufacturers. So we see our auto manufacturers by 10 a.m., 47% of them from the open price were higher, 53% lower. So that's slightly better than that overall group. On average, they'll break even. By the end of the day, 51% were higher, 47% were lower for an average gain of 2.8%. So it looks like, just based on these averages, some of them really came back. So if we just use the average returns, those auto manufacturers did better than their overall population. Let's take a look. Besides auto manufacturers, I think auto parts have also been gapping up. So really quickly, let's take a look at the auto parts industry. And we could see here, these are the stocks, CAAS, HYLN. So we've seen those, making some big moves in the morning. So overall, those in the auto parts that gapped up in the morning, by 10 a.m., 46% of those were higher, 54% lower, very similar to the overall group. By the end of the day, 61% finished higher from the open, 39% lower for an average gain of 1.8%. So there, that looks like significantly better than the rest of the group. Let's take a look on the gap downside. Gap downside, we see kind of the opposite, right? So we see by 10 a.m., 44%, the gap down were higher, 56% lower. By the end of the day, only 38% were higher, 63% lower for an average loss of 1.3%. So whatever that opening price, if it was gapped up, more often than not, those went higher. The ones that gapped down, more often than not, those went lower. So that's really quickly just kind of comparing it and narrowing down based on the industry. If there are no questions on this, Will, I'm going to move on.
Well, Brad was asking, what is the main thing that he's asking Dimitri, can take away from from that 20-day gap history?
I think I just said that, right? So just based on this data alone, right? Just based on this data alone, that's what the data is saying to us, that if I'm using these auto parts, and I'm not, using any other filters like, minimum volume, market cap, but just using the auto parts, those that gapped higher, more often than not in this industry, and these are the stocks, so you could see here the data. More often than not, those that gapped higher by the end of the day, from the opening price to the end of the day, they win higher, right? 61% of the time they win higher, and that compares, that's 10% more than just the overall group, 39% lower for an average gain of 1.8%, right? So that industry alone, it looks like once that gap probably drew in more people, right? More buyers. That's what it looks like to me. On a gap downside, it was the reverse. If they gapped lower, look, only 38% of them by the end of the day were higher from the open, 63%. So that drew in more sellers, right, than the overall group. Does that make sense?
Yep. He just said thanks. So that was perfect. We did have a question right after that, which Brad also said was a good question. I know this isn't directly related to this opening gap. He's asking, where can I see intraday what industries are doing the best or worst at any point of the day? I mean, the only thing I can think of the top of my head is we have the real nice feature where you can look at all the iShares and see kind of how they're performing. That's kind of like a sector breakdown.
Yeah, I mean, probably by like the ETF. Like if I go to the ETFs over here, and if I just use the ETF screener, I'm going to filter out by non-leveraged. So this will filter out all of the ETFs that are like double, triple, short, those types of ETFs. And if you just kind of sort by biggest percentage gain, like right here, if you click on this, it'll sort biggest percentage gainers, biggest percentage decliners. And if you go, I kind of skipped to the ones with the higher volume. So these are just too low a volume, but here's 6 million shares. So that's in natural gas ETF down 4.5%. 3 million shares trading there, which is about its average. This was down 2.6%. Home construction. Here's 3 million shares trading hands. Home builders trading 1.4 times its average daily volume, down 2%. Here, let's go to the biggest percentage gainers. So this one traded 2 times its average daily volume, 2.6 million shares, alternative harvest ETF. So I think this is probably like marijuana stocks. I think. Here, this is MLPs, Master Limited Partners, traded 1.4 times its average daily volume, almost 4 million shares, up 3.7%. So this is just one way to really quickly, take a look at which ETFs are moving. If you go here under option snapshot, this will give you a breakdown of the sector, the S&P 500, SPY, and the sector ETFs. So we could see here on a day, which sectors are moving higher, which ones are moving lower. Here's like a graphical, XLE Energy moved on a percentage basis, moved up the most yesterday. The one that moved down the most, XLB, which was the materials. And you could get like a 2-week, 3-week, or 2-week, 3-month also return. Does that help?
Yeah, that's great.
Also done applied vols. All right. If there are no further questions on this, I'm going to move on to earnings. Well,
Excellent.
So you're good. All right. Let's take a look at what's coming up on the earnings front. So these are stocks that are expected to report earnings the next 2 weeks. I'm going to use this filter to filter for stocks that on average trade 5,000 option contracts or more per day. And let's take a look at the full report here. So we have over here ULTA that's expected to report today after the market close. That straddle, as of yesterday's close, is implying a move of 7.7% in either direction. So remember, it's buying the call, buying the put, and this is the magnitude of the move up or down, 7.7%. That compares to a 4-quarter average move of 5.4% and a 12-quarter average move of 7.7%. So we're 2.3% above the 4-quarter average, like basically in line with the 12-quarter average. The high move in ULTA was 29.6% in the last 12 quarters. CLDR also expected to report today after the market close. That straddle is implying a move of 12.9% in either direction. That compares to a 4-quarter average move of 8.6% and a 12-quarter average move of 16.6%. So we're 4.3% above the 4-quarter average, 3.6% below the 12-quarter average. The high move on that stock is 40.8% in the last 12 quarters. DocuSign, I don't know if we have a full 12 quarters on there yet, Will.
Let me take a quick look.
That's implying a move of 8.7% in either direction right now. In the last 12 quarter, that compares to a 12-quarter average move of 8.1%. And, up to 12 quarters, if there's not.
Yeah, you're right. I think this is the 10th earnings.
Yeah, so 8.7% in the last 10 earnings. This goes up to 12. So we're 0.6%, almost in line with that 4-quarter average, in line with the 10-quarter average, and the high move on that is 21.7% in the last 10 quarters. Marvel, MRVL, also expected to report today after market close. As of yesterday's close, the straddle's implied move of 5.7%. That compares to a 7.7 4-quarter average move and a 3.8% 12-quarter average move, with a high move on that 10.4% in the last 12 quarters. Here, last one today after the market close, SWBI, that's implying a move of 18.2%, compares to a 4.5% 4-quarter average move and this might not, this looks to me also like it hasn't have a 12 quarters as WBI. So this one probably is fairly new as well as WBI, because I'm seeing exactly 4 quarters and 12 quarters. The number is the same. So I'll just go really quickly to that. Take a look. Yeah, so you see only three quarters of earnings. So that's a fairly new stock. If you don't have questions on the earnings, Will, maybe I'll start going to that insider trade screen.
Yeah, great.
Okay, so no earnings questions.
Well, I mean, there was an earnings. I don't know if you want to look at it, but there was an earnings play that's Splunk that Jake was talking about earlier. SPLK, I think it is. I don't know if you want to see how it's reacting after earnings, but I think it's a relatively small amount of. Maybe I'm wrong. It sounds like a newer entity, but
okay. Well, then let's get to the insider trades.
All right, perfect.
Cover that first, yeah, because I think that earnings already reported.
Yeah.
Okay, so let's take a look at the insider trade screener. So this is, so before, I don't know what the question is. Let me just
I'm going to try to go back. All right, it was an individual earlier in the morning was playing. He says, I was playing around with the screeners for insider traders. I'm hoping Dimitri may be able to help me find stocks in which the majority of holdings, like he wants to search by CEOs selling, I guess, and maybe.
Can you finish the question? What is
it?
He
says, can Dimitri help us understand how to find stocks in which the majority of the holdings are from the CEO or founder?
The majority of the holdings are from the CEO. I think, okay, I think I understand what his question is. So right now on this insider trade screener, we're looking at transactions. So these are transactions that are reported on the SEC Form 4, which basically is required anybody who's considered an insider by the SEC, holding these positions. When they do a transactions like a purchase or a sale, they have to report it on SEC Form 4. I think the question he's asking is a little bit different. It's not transactions. He's asking by ownership, right? So out of all the outstanding shares, what percentage are institutions, what percentage are insiders, what percentage is the CEO? That's not what this report is doing. So I can't actually answer that question from this report. And, I don't have that statistic, but I think that's what he's asking, where the majority of the shares, or what percentage of the shares, like let's say Mark Zuckerberg owns out of all the outstanding shares. So he's looking for high concentration of ownership by the CEO. Is that correct?
Yes, that is. He actually just popped in and said that's what he's asking.
Yeah, I mean, that's a good question, but I can't answer that question with this screener, because this screener is just kind of looking at, it's not looking at percentage ownership of outstanding shares, or it's not breaking down the ownership of all the outstanding shares. So I wouldn't be able to answer it with this question. It's a good question, and actually I don't have those. I don't think we have those stats on the website, but I'll make note of it, see if it's something that we can create, but you wouldn't be able to do it from this screener.
Cool.
But while we're on the screener, let's just take a look, what's going on. And what this is doing is taking a look at those SEC filings and looking at the transactions, the buy transactions and sell transactions. We do have filters in place to take out things that are, these SEC forms, they're not very clear all the time. There are things in there that people are filling out and then making notes, and you got to kind of go in there and figure out. That's why we have these links there. So all these, we kind of filter out by those boxes that they were required to fill out, but then you have to go in there and read, their footnotes, right? And kind of go back and try to figure out exactly what happened. But at least we could initially filter out things of interest from from the top. So I'm going to use these filing dates because I think we looked at it like yesterday or before yesterday. So let's just take a look at the most recent transactions. So it's going back a couple days, looking at the most recent transactions. I'm going to take a look at transactions that are at least in notional value of $1 million worth of stock or higher. Okay, so I'm going to do above $1 million worth of stock or higher. And let's first look at the buy side. So I'm going to look at buy transactions. Now, here I'm going to sort by the filing date. So these were filed yesterday. So last night. So these came in December 2nd. You can see here last night. These are the transaction dates. And looks to me like in FTSI, there was a purchaser, 10% owner. This is the owner name. Looks like bought 2.7 million shares of this stock, 1708. Then bought $5.8 million worth of stock for $15.88. November 20th, bought $3.5 million worth of stock for $13.98. So you could see, it's been climbing and he's been buying. Looks to me like he's been buying more on the way up. Foot Locker, here's another one. This is the owner, 10% owner. Looks like they did 2 transactions, November 3rd, December 1st. For the first one, bought 30. Actually, here's another one down here, November 27th. Same owner. So let's just take a look at these here. 3757 bought $22 million worth of stock. That's up 5% since that transaction. On December 1st, bought it for $38.39. So that's up 2.7% from that transaction. Bought $15 million worth of stock. Again, you could go into here. If you click on her, this is the SEC, the filing. You could open it up and then start reading. This is the transaction. There's footnotes, 2, 3, 4 different footnotes. And this could be anything, right? They could write in anything they want in here, trying to explain it. So it's up to you kind of to read it and try to interpret what's going on. Why are they doing it? Research you could research this equity investment firm in further detail, but that's just trying to filter out from the top line. Okay, we see another one, GIM, that this is the owner on December 1st, purchased $4 million worth of this stock. SREV, this is 10% owner, November 27th. This looks like a, small price stock for $1.30, purchased $6 million worth of that stock. Let's go in the reverse side on the sell side. So here, this is selling over $1 million worth, and I'm going to just take a look at what they reported shares held after the transactions. And I've been looking at these, and these are kind of also deceiving because this is how they reported it. But when you go down into the filing, they have all this information you have to read. But here's one that stands out. Look, here's Facebook, Mark Zuckerberg. So December 1st, and you could tell here something is not right because shares held after the transaction, 11,100. So that doesn't look right to me either. I'm going to go to that filing really quickly. So here's Mark Zuckerberg.
Yeah, it seems like it should be a couple zeros after that.
Yeah, exactly. So you see here all these footnotes and, by Mark Zuckerberg, trustee. And it looks to me like maybe look at all these notes that they have. And something there is going on. I don't know if he's like moving stock around into like, there's a foundation. I don't know, I don't know what's going on. There's a trust in here. You got to kind of go in there and read it and figure this stuff out because they all do different things. I don't know if they're doing it for tax purposes or not to expose all their shares or where they're at. Sometimes it's very confusing because there's no standardized, right? They're all doing all this different stuff, right? Go and read 26 footnotes on this. I'm trying to figure this out. Again, take a look at it. We're filtering out these basically these bigger over here, what they're reporting over here. And then you kind of have to go in there and start reading and trying to figure out what actually transpired. Like, what are they trying to communicate through these filings? By the way, sometimes I see amendments to these filings, corrections. It's very, very sloppy. Hopefully, we're over 9:30. Will.
Whoa! Everyone was. I was watching the whole thing because it's amazing seeing that, particularly when you mentioned Mark Zuckerberg. Sorry about that, chameleons. We went over. The bell has just gone off. Great job, Dima, as always. Any parting words for the chameleons?
No, thank you for joining us. Have a good trading day. Stay safe. Hopefully we'll see you guys tomorrow morning.
All right. Have a great trading day, everyone.